Hey guys, and welcome to this video on what exactly is private equity. So private equity is when a different private equity house raises a private equity fund. This is a lot of cash that they raise from different investors, so from accredited investors and non-accredited investors. So accredited investors will be people who have a high net worth about themselves, and you also have institutional investors then that will go in, things such as university endowments, pension funds and insurance companies. So all these people put cash into this private equity fund, and this private equity fund goes then and looks at different companies where they can invest that money and make a good return on it. Private equity funds then typically like to invest within these companies for a 3 to 5 year time frame, and these funds have different analysts that go out. They look at the different companies that they want to put into these portfolios, and they will assess how profitable those companies look and the different strategies that company could have and how profitable it may be over that time frame. So what happens is when they get all these different companies, they put them into the fund. Usually they would like to have them uncorrelated, so coming from different sectors. They don't want them from the same sector in case there is a downturn in one and that has an effect then on multiple companies within the portfolio. So how does private equity investments usually work? So typically there are three types of private equity investments. You have a minority investment, which is where the private equity fund comes in, buys a minority stake within that business, so they don't have controlling rights on the votes within the business. They can also buy a majority stake where they have the majority of the voting control within that business. So for crucial decisions, this is very important because the private equity house then has the voting rights for the company. They can also go in and do a buyout where the private equity fund just completely buys the whole company out, so the main owner of the business then will walk away. So private equity funds are popping up a lot in the UK and the US, and what they do when they go into a business is they will come in and lean out the business as much as possible. So they will look at the workforce, try and lean that out and cut as many costs as possible. They'll also look at the different products and services that business provides, and they will try lean this out. So if they have a wide range of products and services, this isn't going to be very cost effective. They'll focus on those profits they can make from a couple of products, the most profit generating ones, and look to maximize the value within those products or services. So typically, once you get to that end of that time frame, they will look to sell. That could be a trade sale to a listed business. It could also be a sale to another private equity house, and then the private equity fund like to exit and get a return then on the initial capital that they raised from those investors at the start. Why is private equity becoming so popular at the moment? So if you look at listed businesses, they usually have to report on a quarterly basis. So with that, they can't make any drastic decisions within the business because shareholders externally will react badly. With all the external reporting that listed businesses have to do, they come under a lot of scrutiny from shareholders. With private equity funds, on the other hand, they want to make a return over the 3 to 5 year time frame. So in terms of quarterly reporting and having the numbers looking good, it's not as important as it would be in a listed business. So that gives the accounting people within the business that time frame to work and drive the business over a longer period to get a return for the shareholders they have from the private equity fund. Usually the private equity fund as well then sit on the board of directors, so they would have a representative here. When the financials are presented to the board of directors every month or every quarter, the private equity person will look at these financials and they will quiz the different finance people in that business that are responsible for them. So that is pretty much it on private equity and what exactly it is. If you have any sort of questions on this, feel free to make a comment in the section below. If you thought this video provided some value, please give it a thumbs up. I'll also be providing different content like this, so if you thought this was useful, please subscribe to the channel. Thank you.